So, good morning, everybody. Thank you for joining us here today for our Kickstarting Success, Navigating the Essentials of Financing Your Co-op. My name is Trista Piopiskinias. I'm the Director of Indigenous Relations for Co-operatives First. So for those who are unfamiliar with Co-operatives First, we are a nonprofit business development organization created to create awareness and support cooperative development in Western Canada. We are located here in Saskatoon on Treaty 6 territory and the homeland of the Métis. So today I am really happy to have two wonderful guests speaking with us today. We have Noah Wilson from Futurpreneur and Mark Clemens, the Senior Vice President of Business Advisors for Innovation Credit Union. So thank you very much for joining us today. We're just going to get right into it. I have a list of prepared questions to ask the panelists, and then from there, we will open it up for questions from the audience. So either feel free to put them in the chat or raise your hand and we'll call on you when it's time. So I will start with Mark. Mark, would you like to introduce yourself?
Yeah, so for sure. Thanks, Trista. Really great to be part of the webinar today. As you mentioned, I'm the Senior Vice President of our business advice team here at Innovation Federal Credit Union. So a bit about myself. I was born and raised in Saskatchewan on a farm in the southeast part of the province. I've been working in business banking for around 19 years. I started as a business advisor in the credit union system and work towards the position I'm in today. I lead a team of 12 business advisors that are located across the province. And our team is focused on medium to larger enterprises. And we also have a small business team focused on small business and sole proprietors. So we feel that helps our understanding of the challenges of each different type of business segment. So I'll talk a little bit about Innovation Federal Credit Union as well, and I'm fairly passionate about where I work, so I'll try not to use up all the time that we have today talking about innovation. But as most people probably know, we're a credit union, we're a financial cooperative, so we have a focus on not only providing top of the line financial services, but also being a community-minded organization. So we hard code 2 to 4% of our profits go back to communities and members. We're a founding signatory of the Principles of Responsible Banking, which underlies our commitment to making contributions back to our people and our communities. It really ties it into us being a cooperative. We achieved our federal status last year, and what that means is we're one of 3 credit unions across Canada that has the ability to provide services coast to coast across the nation. And we have 24 advice centers across Saskatchewan, going as far north as Buffalo Narrows, and we were just chatting about the advice center that we're opening this year in La Loche, and we opened an advice center in Isle Cross this past year. One thing that I do just want to touch on is a really engaging part of my work at Innovation is we get to work together as part of our Indigenous connection strategy, which is an initiative for us to connect with Indigenous community leaders, work on Indigenous initiatives that benefit both those people as well as innovation by making financial services accessible for Indigenous people. So we're building some great relationships and some great partnerships through that work. And lastly, if I'd leave you with one thing about innovation, it's that our purpose is simplifying banking for Canadians. And that's something that we aim to live up to every day, and we hope that our members see that as they're working with us. So a bit of an overview there, and tried not to take up too much time, but I like to share the wonderful things that I think we're doing.
Thank you so much, Mark. Noah, would you like to introduce yourself and Futurpreneur?
Yeah, for sure. So I do like to introduce myself in the language whenever I can. So Bojo Anin, no Wilson Indigenous Kas after Zakana go. Ishki Ishkanaganing and Dunjiba Wabshi also Winnipegong in Dunjiba, but Wabshishi and Doden in Nindanoy Maganadak. So my name is Noah Wilson. I'm based out of Winnipegong in Dunjiba, based out of Winnipeg, Manitoba. But my home community is Peguis First Nation, Ishki Ishkanaganing. And I'm from the Martin clan, and just want to acknowledge all my relatives on the call today, and then Dunaway Maganadak. And yeah, my name is Noah Wilson again. I'm our Senior Business Development Manager for Futurpreneur, specifically for our Indigenous Entrepreneur Startup Program. And I cover Manitoba, Saskatchewan, and Nunavut for any clients who identify as First Nations, Métis, or Inuit. And really proud to be a part of a 100% Indigenous-led team supporting our Indigenous clientele to provide services that not only understand the nuances of the challenges that faces Indigenous entrepreneurs, but also the opportunities that are there for Indigenous entrepreneurs, and there are many. And what I do is I help entrepreneurs navigate those ecosystems of supports. And my main role is to support clients with submitting an application for our financing and mentorship program at Futurpreneur. So Futurpreneur is a national nonprofit. We've been around for over 26 years now, and we were created in essence to support startup businesses. And the gap that we were filling back in the day was that some of the big five banks came together and they said, we're not able to support startup entrepreneurs based on our risk profiles and what they're able to do in terms of lending. So they needed an organization to help bridge that gap from pre-launch to early stage businesses to get them off the ground, get them financing, and get them to the stage where they can start accessing more traditional lending streams. And one of the core aspects of Futurpreneur is we provide finance, but we also provide mentorship. We don't separate the two. If you are looking to get financing with Futurpreneur, you are you have to be willing to work with a mentor, which we think is a bonus, if anything. And one of the things that differentiates us as a national nonprofit lender. So we provide startup capital, as I mentioned, for pre-launched businesses. And early stage businesses. We just had an update on our programming, and maybe I'll share a little bit later. But other than that, and Futurpreneur, which I'm sure I'll get into it a bit more later. Born and raised in Winnipeg, Manitoba, but I've grown up all over. My dad was a part of the RCMP, so I moved quite a bit. Lived in Regina for a bit. Lived in Portage Prairie. Lived in the Yukon for a minute there too. So been all over. Really passionate about Indigenous entrepreneurship. Previous to Futurpreneur, I was in the banking industry as well as a small business account manager, and worked my way up from a bank teller to that. So I have a good handle on all of the banking needs and really the foundations that entrepreneurs should have even outside of business banking. So really happy to be a part of the ecosystem here, and working with colleagues like Innovation Credit Union, Mark and Jasmine, and Co-operatives first. So pleasure to be here, and yeah, excited to have this conversation.
Thank you so much, Noah. And so I'll just jump right into the questions. I will start with Noah. Could you provide an overview of financing options your institution has available for startups?
Yeah, I'd love to. So this is actually really timely that we're having this panel and webinar today, because Futurpreneur just announced last week on Thursday updates to our programming. We're able to provide more financing than we have in the past or ever have, which is really exciting. I'll dive into that in a second here. So Futurpreneur provides two main funding streams for new entrepreneurs. And again, reiterating, we provide supports for pre-launch, so businesses that haven't, got off the ground yet, but need finding themselves in that catch-22 situation where, they need funding to start their business, but they don't have historicals to go to more traditional lenders to get that lending to start the business. So we're able to support entrepreneurs getting that startup capital through our two main programs. So if you're a new entrepreneur and you're looking to jump into the business full time, then we have our startup program. And our startup program is for full-time entrepreneurs or entrepreneurs that are looking to jump into the business full time. You're able to access up to now $75,000 with Futurpreneur collateral free, which is really exciting for us. Just less than 2 weeks ago, we were only able to offer up to 60,000. And we're one of the only, I think we are the only national nonprofit organization or only organization that's able to partner with BDC, the Business Development Bank of Canada, very closely to apply for our funding. So how it works is for our full-time startup program, entrepreneurs can be eligible anywhere between 5,000 to 25,000 with Futurpreneur. And depending on their business plan, their cash flow, and then a personal credit pull. And based on their on what their eligibility amount is with Futurpreneur, BDC is willing to match that up to 2 to 1, so up to the 50,000. So that's where the 75,000 comes from. So let's say that you're eligible for 25,000 with Futurpreneur, you have the option of matching the loan 1 to 1 with BDC or 2 to 1 with BDC, so upwards to 50,000. They're 5-year term loans, so you'll be fully paid back within 5 years. And one additional kind of aspect we keep in mind with new entrepreneurs is how critical cash flows are to the business. So we have interest only payments the first year to make sure that the payments are really affordable as the rubber hits the road, so to speak. And then you start to make principal and interest payments on the back end for the last 2 to 5 years. What else can I say? Oh yeah, we're collateral free lenders. So we don't require any security to back the loan, which makes us a really flexible lender and a lender that's able to collaborate with other organizations that might require collateral. And typically most lenders do, especially for startup businesses. So we're a really collaborative business in that sense, working with other organizations that maybe 75,000 is not enough to start your business, or maybe you're looking to buy a business. We can support with that as well. What else can I say about that? We have really competitive and honest interest rates in the market. Our Futurpreneur segment is capped at 9%, but typically it's CIBC prime plus 3%. And then the BDC segment is CIBC floating base rate plus 1.65. But we can always get into details of that when you're having a meeting with me. But one of the biggest benefits of our whether it's our startup or side hustle program is you get a mentor for 2 years after disbursement, as I mentioned before. So what that looks like is you get matched with an entrepreneur that has, we look for someone that has at least 10 years of entrepreneurial experience themselves, or an industry professional, between 12 and 15 years in their field, to help kind of guide you and be that support system as you get off the ground. As for a second program that we have, that's for entrepreneurs that are looking to start the business part-time. Maybe they're not willing to jump into it, feet first, and they want to dip their toes into entrepreneurship before moving into it, or maybe market validating their business a bit more. You can access upwards to now 25,000. Just less than a week ago, it was only 15,000. But that segment is just within Futurpreneur. It's also collateral free. And you still get a mentor for 2 years after disbursement with that program too. So high level, that's the program as well. What else can I say? Yeah, like we have many workshops and resources, and my main job is to work with clients to build the documentation to apply for those 2 programs. For the startup program, we require a full business plan and then a 2-year cash flow projection, which we have templates and supports to get those things done. And then for the part-time side hustle program, all you require is a business brief, which is a condensed business plan, but we still work on a 2-year cash flow projection. So in a nutshell, that's what we provide at Futurpreneur, but that doesn't touch base on the workshops and all the other things we provide here too. So
that's amazing. Mark, do you have what financing options does Innovation Federal Credit Union have for startups?
Yeah, sure. I can tag on to some of the things that Noah has talked about. Maybe the first thing that I'd mention is, we have a number of different financing products that we can provide to help new businesses. And I know our focus is on lending, but I'd probably be remiss if I didn't mention that we're a full service financial institution. So, from my perspective, a business's health is often influenced by the financial health of its contributors. So we have a team here that provides support on personal banking, financial planning, investing, insurance, cash management, the whole gamut. So I think those are things that help set a new startup, small business up for success as we're looking at different lending options. From a lending perspective, access to working capital is going to be really, really important. We provide operating lines of credit that for your new business is there to pay for expenses as you wait for income to come in, things like payroll, utilities, inventory purchases. That's attached directly to your business account, so it's always readily accessible. And having the right amount of operating credit at the right time for a startup is really important for a new business. So we typically benchmark having a credit limit around 65% of your total expenses for your business cycle when we're setting that up. We provide term loans for things like purchases of equipment, inventory, improvements to property. Typically, these are things that are going to come with a startup new business, and it's important that we tailor the conditions and the terms of those loans to your specific purposes. To tag onto that, we offer a product that we call a quick loan, and so this is a readvanceable term financing facility. And what I mean by that is, as you pay it down, you create availability in the loan so that you can use it again in the future. And part of that is creating flexible repayment terms on that quick loan, and it creates real convenience for small businesses so that they have ready access to capital. It allows business owners to make quick purchase decisions on items like equipment or inventory without needing to get new financing approved. For the things that I've mentioned, lines of credits, quick loans, term loans, we have some quick approval programs in place that allows ready access to up to 50K in capital just based on a credit bureau pull. So as long as you meet that credit bureau minimum requirement, we can provide a quick response, nimble response to somebody that's looking for new financing. We do provide mortgages as a lending institution for the purpose of buying property for your place of business. Probably one thing that's unique about our mortgages is that we're very lenient on our prepayment options. So you can prepay up to 20% of your mortgage every year over and above your regular payments. And that offers you a lot of flexibility for when your cash comes in. Probably what I would say outside of programs or products and services, I'd maybe speak to our mindset a bit. I think we look to tailor specific financial solutions, and we're a very flexible lending institution. So that's one thing I really value about working within the credit union system. We have standard requirements, but we're also nimble enough that we can find ways to work outside of the box. That's sometimes difficult for larger institutions. Our teams are set up so that they're specifically targeted at different business segments, and they know how to accommodate the challenges that come up through that. Probably just tagging on to some of the things that Noah talked about is I think we position ourselves as a real collaborative organization as well. So if there's ways that we can work together with Noah and Futurpreneur on a specific application to work together on how our financing solution works, or the Canada Small Business Financing Program is another one that we utilize quite often that allows for lower down payments so that you can save your cash for other things that you need. It also allows you to finance things that aren't traditionally financed by other financial institutions, like improvements to property that you don't own. So I think we're able to work, outside of the box in a lot of scenarios while working with some of the traditional loan products that we have.
Great. Thank you so much for that. So Mark, how do you evaluate what type of financing is the best fit for a specific startup?
Yeah, so I think probably you're gonna hear me say cash flow a lot. I think probably as we talk today, but from my perspective, when we're evaluating the specific type of financing that's the best fit, um, from my perspective, it's really, really important that you match the purpose of your financing to the type of financing product that you use. So the main thing is matching up that timing of your cash inflows and how much those inflows are compared to the volume and timing of some of your obligations. So we talked about lines of credit. So for instance, day-to-day operating costs need to be financed through a line of credit typically. And it's important that if you have a line of credit, that's what you're using that for, is your day-to-day expenses of your operation. You're going to have things that come up for longer term asset purchases. And if you use those purchases for equipment or property finance through your line of credit, it's going to take a longer term to pay off, and you're going to tie up your operating cash that should be used for your day-to-day expenses. And we all hear the term cash is king, and it really is true. You want your medium and longer term investments to be financed by medium to longer term loans or mortgages. Maybe one thing to think about when we look at types of financing for term loans or mortgages, you want to match the length of that financing to the useful life of the asset or the product that you're financing. So for instance, if you're buying a piece of equipment and you know that piece of equipment is going to need to be replaced in 3 years or depreciated in 3 years, you don't want to take out a term loan for 10 years. You don't want to be in a situation where you still have payments on an asset that you need to replace, or you're making payments on something that no longer has some value. So we see that in investments in software. That's a good example. Knowing that technology is going to replace that on an ongoing basis, you want to be taking a conservative approach to the length of times. And this will allow you to build some equity in your business and potentially leverage that equity in the future. So there's a couple thoughts just on finding the right terms and types of financing when you're initially looking at your startup.
Noah, same question. So
Yeah, for us, we don't have like, we're not a full service bank, and so we really only have two pathways that we're looking at when we're assessing with clients. Is really looking at whether the entrepreneur or entrepreneurs are looking to make the business their full-time source of personal income, in terms of meeting the subsistence needs for them and their family. So if an entrepreneur is looking to launch the business full-time within the next 12 months or 12 to 18 months, and this is going to be a business that's going to be providing the subsistence income that they need for the family, then we'd be looking at going through the full-time startup program to make sure we have a robust business plan and a cash flow projection that takes into account the projected revenues and the expected expenses, and to ensure that you're able to pull enough income out of the business yourself, or we're accounting for it to make sure that you're able to take care of yourself as well, because ultimately businesses are here to support the family and grow that opportunity for, I always say, self-determination, especially for Indigenous peoples. But and of course, when you're starting a business, you're going to be living a little bit more lean than you might be, and some of these other things. But typically, if you're looking at starting a business full time, then the startup program is the best option for them. For our side hustle program, the main requirement for that is that you have some sort of full-time household income outside of the business. And what that means for us is, if you have a partner in the household that's, having full-time income that's able to, meet the bulk of the expenses and needs of the household, then that works for us. Or let's say, for example, some combination of your work and a partner's work leads to full-time income outside of the business, or maybe you're working full-time and you're doing this on the side. As long as the side hustle is supplemental to some sort of other, income that's primarily supporting the family unit or the household, then the side hustle program would be a good fit. We just want to make sure that if you are launching a side hustle, it's not becoming your main breadwinner for the family, because if it is, then we should look at the startup program. So those are kind of the main conversations I have with clients, to see what would be the best fit for them. And sometimes we also do acquisitions as well. So that's something that's really becoming more prevalent across all industries right now, as there's a lot of folks that are looking to retire and looking to sell their businesses. So based on our loan amounts, we definitely have to partner up with folks like Innovation and other IFIs, Indigenous financial institutions, such as SEAF, Saskatchewan Indigenous Enterprise Foundation, or Clarence Campo Development Fund, to help support with those type of acquisitions. Or let's say that some of your startup costs are larger than Futurpreneur can fund fully. So we rely on our networks, as well as community futures. So the nice thing about Saskatchewan, Manitoba, and just really broadly speaking, what I've seen in the ecosystem is that we're coming. It's just becoming more and more collaborative in the approach that we're taking with entrepreneurs. Because I always like to say it's it takes a village to raise a child, but it also takes a village to raise a business up. So that's kind of our approach and between the two programs there. One thing I should mention is that Futurpreneur, by the essence of our name, we are supporting the future of entrepreneurship across Turtle Island, across Canada, and what that means for us is that we do have stricter eligibility requirements around the age requirement. So part of our mandate as Futurpreneur is to support young entrepreneurs across Canada, and those are typically the entrepreneurs that have the most difficult time accessing traditional lending streams, because they don't have the asset bases that take sometimes more than a quarter of your life to get off to acquire, or they don't necessarily have the experience that other lenders might require to get a business off the ground. So we do support entrepreneurs between the ages of 18 to 39. But as long as the business is majority owned by someone or individuals within that age range. So I had an example here in Winnipeg. We had a business called Riley Gray. It's a mother-daughter duo business. The daughter owns, majority ownership over the business, so 51%. The mother owns 49%, and we were able to fund that business as well. So that's a small caveat of our program. But yeah, that's kind of high level of our two programs there. But one thing I should mention too, though, is our workshops are free templates. Our all of our other resources online, they don't have age requirements. So if you want to join our workshops, if you want to utilize our business plan template, our cash flow templates online, all of the other free resources we have online on our website, feel free to do that, of course. But that's kind of more related to our lending requirements.
Thank you very much. Okay, so we did have a set of prepared questions, but I'm just going to throw one out there that Noah, you had talked about collaboration and working with others, and also majority-owned businesses. My question to both panelists is, how does your organization support co-ops? So Mark, as a credit union, how does innovation work with other co-ops?
Yeah, I think we have many members that are cooperatives, and that can range from a lot of different types of organizations. So that can be a smaller cooperative focused on preschool education, board-run organizations, all the way up to larger cooperatives that we see running grocery stores and gas stations around our communities. I think at the heart of it, like in our fabric, we're a cooperative, so it's important for us to see cooperatives be successful, and so we have an inherent desire to support co-ops right off the hop. I think the big thing probably when we're working with cooperatives is just focusing on understanding their actual business plan, what their structure looks like, what success looks like for them, and how we support that. And so, I think there's different lenses that we look at credit applications under, and when we look at applications for cooperatives, one, there's different things that we have to understand. We understand that there's not the same type of shareholder structure as there is in a standard business plan. So we know that we're not looking at personal net worths or things like that. We also understand that many of them are set up in a not-for-profit structure. So when we're looking at financing, we're probably looking at it from two specific perspectives. One is how does their cash flow work on a kind of a day-to-day, week-to-week, month-to-month basis, and how can we tailor a financing solution for that, and then how can we support kind of their working capital needs through startup and on an ongoing basis. So from a cooperative perspective and financing cooperatives, we very much have a flexible approach and take an approach to really understand the specific cooperative that we're dealing with and how we can support them. I know there's a question in the chat around how we approach not-for-profit businesses and what type of lens we look at, and I can answer that later with a little bit more detail. But I think specific to your question, as a credit union and applying the flexibility that we have, we just truly try to understand the day-to-day operations of that business and how we can support it.
Thank you. Noah, for Futurpreneur, I know that Futurpreneur supports co-ops. So are cooperatives eligible for the programs that you had mentioned?
Yeah, actually in the last, I think when I started at Futurpreneur, we just opened up cooperatives as an ownership structure that we could start looking at in terms of going through a program. Primarily the eligibility for cooperatives would be solely for the Futurpreneur segment, so upwards to 25,000 to get the cooperative off the ground. Unfortunately, while we're able to adjudicate on the behalf of BDC, there is other eligibility requirements with them that likely wouldn't be able to for them to jump on a deal like that. But within Futurpreneur, because we're a little bit more flexible in terms of how our criteria is, and we have a little bit more autonomy on what we can support, we are able to support cooperatives now, which I'm really excited about. As of yet, I haven't heard of a cooperative go through Futurpreneur, so I'm hoping that someone I can work with in the future, we can knock that one down, and I think there's large opportunities for cooperatives within Indigenous communities specifically. But we do approach it similar to how we would approach lending to a non-for-profit, and really it's centralized around the ownership structure. So similar to non-for-profits, cooperatives typically do require, or almost always require, a board of directors, and that's really kind of the main crux of how we have to look at a deal, is to ensure that the board of directors of cooperatives, they will have to attest that there's nothing in their bylaws restricting members from taking on personal liability, because while we're a collateral-free lender, we do require that the personal guarantee of sorts. Like, we're not attaching our loan to their personal assets, but there needs to be individuals responsible for the loan. So there needs to be a minimum of 3 directors. Sometimes it may be more, of course, but there needs to be at least 3 board of directors. And then we will also need the board of directors to sign a resolution form to appoint, parties to authorize and sign the loan docs. Sometimes it is a little bit more of a complicated ownership structure, but that's generally kind of what to be expected around a cooperative. But it is a lot different than our typical startups, but it's something that we're looking at supporting as well. And yeah, so that's essentially the kind of crux of it, is that we really have to look at the board of directors, and we approach it similar to how we would look at a non-for-profit as well. So
Hey, thank you. So great to hear the support co-ops have in the financial industry. So my last question before we open it up to the participants is, can you share some strategies for helping a startup be more appealing to potential lenders and investors or financial institutions?
I would say, maybe I can jump in there. I would say the biggest challenge I've been seeing in terms of startup businesses currently is that I really encourage entrepreneurs to work with institutions like Innovation Credit Union to really establish a foundation of a personal financial plan before even looking to launch a business. I think one thing that's overlooked in terms of entrepreneurship is they tend to lose sight of their personal financial goals when they're launching their business, and sometimes they compromise their personal financial health to get a business off the ground, which I don't think it needs to be that way. Certainly it doesn't with advisors that you can find at Innovation Credit Union and other institutions. To make sure that you're looking at your personal financial health, you have a financial plan and goals for your personal financial health. And specifically speaking to making sure you have a really good understanding of where your credit is at, personal credit, because when you're getting off the ground as a new startup business, banks really don't have any other metric or benchmark to base their analysis against around your ability to repay. So typically, at least for Futurpreneur, we have to look at your personal credit history to see what are your habits when you're managing credit and repaying lending and whatnot. And more times than not, a lot of I mean, if you just look at our education system broadly speaking, we kind of have to learn by trial and error through credit a lot of the time, unless you're working with an advisor at Innovation that can help you kind of understand that language and that literacy side of things early on. Or if you're lucky enough to have a family member to kind of give you that conversation early on. But a lot of folks do have to kind of learn around credit the hard way and look to rebuild it. So before you start looking at getting lending, it's really important to have that meeting with your personal financial advisor to see where credit is at. Looking for errors on your credit report after COVID-19. I've been seeing a lot more errors on credit reports because there was paused payments, and I can, there's a few stories where they had an agreement with the institution to pause their payments, and for whatever reason it wasn't reporting correctly on Equifax or TransUnion, and we had to send in letters to correct that. So that's one of the first starting points. I think that is overlooked because you're so focused on the business, you kind of forget about the personal financial aspect of it. So definitely recommend doing that analysis, like, first and foremost, and finding supports. I mean, there's great supports like the Credit Counseling Society of Canada. I know there's a credit counseling society in Regina, and there's one in Winnipeg as well. But there's a network across Canada that can help you understand and navigate your credit. But other than that, is really being focused on your cash flows and understanding your projected expenses and thinking about your cash flows as when we work with Futurpreneur, we do month-to-month cash flows, which is sometimes different than other lenders. But what I always tell the entrepreneurs is, a lot of them struggle with well, how am I supposed to anticipate my cash flows as a new business? I don't really have any historicals if they're pre-launch. What I like to say is think of it more as sales targets, right? Think of it as, these are the amount of sales I need to make. Like if you put your product or service, like let's say if it's a service, maybe it's billable hours. If it's a product, maybe you're looking at the units you need to sell. But looking at those and saying, okay, as I get off the ground, what kind of targets do I need to make in terms of sales to be able to support these expenses and then hopefully make a profit at the end of the day. So yeah, I think, and then using tools like lines of credit that can help you get you through those invoicing periods, depending on the industry. If it's construction or something like that, where you have invoicing periods that might be 30 days or longer, and you still got payroll to meet, you still got rent to pay, you still got these other things, having those tools are really important. And that's something that Futurpreneur doesn't provide. We only provide term loans for startup. And I think Mark mentioned it too, is like ultimately working capital is the lifeblood of your business. You need to have cash on hand to survive as a new startup. So don't underestimate the amount of cash you need on hand to get your business off the ground, because more times than not, you need a lot more than you anticipate. So that's kind of my ramble on that.
Mark, any advice to help startups make themselves more appealing?
Yeah, so this is a big question. I could probably start with saying what Noah said. Yeah, I'll add on a few things. So I think first, make sure you have a well thought out plan. So a business plan is really key to engaging lenders and investors. A little bit of a plug: we do have a nice little business plan on our website that provides a bit of a template for projections, and also kind of probes into some of the good things about telling the story of your business, and providing some good prompts when you're thinking about your business startup. A couple veins to think about, within that is, really spending some time in your business plan around who are your customers. What does your customer group look like? Are they going to be sticky to your business? How do you envision growing them? Why are they interested in your product or service compared to other offerings? Think about your competition in your plan. So how are you differentiating yourself from that competition? Is it your service, your product, your location? Do you have a unique value proposition that comes with that? Think about some of the challenges that might come up. Labor. What do you need for staffing? How are you going to source that staffing? Is it unique skill sets? How are you going to attract those folks to your business as an employer? And think about suppliers as well. What do you need to support for sourcing supplies? Do you have a readily steady supplier, and can you lock that in at reasonable costs? So those are kind of business plan type of items. When I think about it from a lender perspective, there's some things that we look at that we call the 5 C's of credit. Character, capacity, capital, collateral, and conditions are those 5 C's. Character is about credit history. If it's not a traditional business model with owners, if it's a more board run, what's the management and experience and training that's there. Capacity is about the ability to meet your debt obligations on a regular basis. So building conservative budgets that allow for ups and downs is important when you're thinking about capacity. We usually work with our members on a sensitivity analysis on how your business can withstand, drops in income or increases in expenses or increases in interest rates. Capital is about, your savings, your investments, your equity. And this is always going to be a challenge for startups and new businesses. So looking for ways to find investments and leverage grants and funding opportunities is really important. Collateral, kind of speaks for itself around, the type of security that you have available to offer. And you're always going to get more professional or preferential lending terms, with stronger security position. I think Noah really spoke to this, but one of the things that I think is really crucial for newer businesses is thinking about that initial cash flow period. So you might, have a business plan that really focuses on your first year or two of profitability, and you have a really strong projection and outlook. What sometimes get missed in those financial projections is not what your profit might be or what your assets are, or the funding that you might need, but what's the cash flow requirement for your first 6 to 12 months, because this is going to be the riskiest period of your business. And most businesses aren't going to start up and hit the ground running on day one, generating the type of profit they are on month 12 or month 24. So, but on day one, you're still gonna have all the expenses that you're gonna have on month 12 or month 24. You're gonna have your salaries, you're gonna have your utilities and your rents and your loan payments and your cost of inventory. So really looking at that monthly cash flow, what's month 1, 2, 3, 4, 5, 6 is important, and working with your lender on that. Beyond that piece, I would say like a couple softer things is build yourself a group of trusted advisors, a trusted team around you. So mentorship, Noah talked about, how they offer that through some of their programming. That's important. Who's your accountant? Who's your lawyer? Who's your personal financial planner? Connect these people and have them work for you and advise you. And that's really going to help, having a team around you, make you more attractive to lenders and investors. Noah talked about, I think, partners. And so I won't touch on that too much. Folks like Clarence Campo or CEF, anytime that you can leverage grants or equity injections or interest only type of financing, that's really important and will, make your business plan even more attractive. I think probably lastly, what I would say on this is like be transparent about what you see your challenges are and the things that you think might be hurdles for you to get over when you're talking to investors or you're talking to a lender, and let them know how you plan to tackle those things. Because I think, everybody understands there's going to be risks and there's going to be challenges in a new business, and putting those things on the table and talking openly about them just shows your management ability and demonstrates, you're uncovering some of those potential pitfalls that are out there, and it creates an opportunity for discussion on those things. So, that's kind of some of the things that I see as, setting yourself out for success with a lending application or talking with investors.
Thank you so much. So we are going to answer a couple of the questions in the chat. The one I see is from Kay, who works in the worker co-op sector. And Kay is interested in knowing how both financing opportunities could fit for a worker startup, worker co-op startup. So
I think for me, I like it would have to be centralized kind of around the governance structure of the worker cooperative, like primarily. It would be centralized around kind of the ownership group or the maybe not the ownership group because it's collective ownership, but but the board of directors are really kind of the crucial piece for Futurpreneur. Is, I would assume that, part of the worker cooperative would be electing their board of directors, and then those board of directors would have to be willing to, put, skin in the game in terms of that lending and getting that off the ground. So that would be the kind of the main requirement there. And sometimes that's a tall task to ask for someone who's looking to get into a workers cooperative. Something that comes to mind for me is there are kind of groups of, I think of like fishing cooperatives where, you got, a group of fishermen, and maybe they don't have the ability to get a processing, a processing center individually on their own, but collectively they can pool, their investment to get something where, they can start processing or getting to bigger markets, and the ownership of those fishermen become the board of directors of that cooperative for that fishing group. But yeah, that's kind of the main thing for Futurepreneur is who are on those board of directors, and are they willing to kind of put skin in the game in terms of the growth of that business regarding the loan itself. So that's kind of how I would approach that. But it's really case by case a lot of the times with the cooperative sector, and we really kind of have to dive into the details of that for sure.
Okay, thank you. So Mark, a question came into the chat to see, and is asking, does Innovation Credit Union underwrite credit for nonprofits using different metrics than for profit businesses?
Yeah, so we kind of touched on this a little bit. I would say that we don't underwrite them under different metrics per se. There's still things around, capital, working capital, ability to service your debt. Those are always going to be things that we use as a a standard measurement to understand the lending situation that we're going into. I think from our perspective, it's about understanding the business model and where it might make sense to stretch on some of our certain standards because of what that business model looks like. So there are certain different things that we understand come along with financing not-for-profit businesses, and there's certain risks that we're comfortable with, as long as there's other areas that we can demonstrate, kind of compensate for that, whether that's soundboard management, or a good cash flow position, or strong support from community or other entities. Some of the cooperative financing that we do, or even to the worker co-op question, comes from support in some of the communities, because it's an essential service, or a service that's very important to the community. So things like your local municipality wants to provide additional support to those cooperatives or startup entities. So those are some of the things that we work through on a case-by-case basis. And like Noah said, sometimes it is about understanding that specific case and the specific business model, and figuring out how we work from there. But I guess to the essence of the question is, we don't look at them with the exact same lens. We don't look at those applications under the exact same lens as we would look at some of them are more standard applications. We just try to figure out how we mitigate some of the different things that are part of financing not-for-profits and co-ops.
Thank you so much. And so we are reaching the time for today. So I want to thank Noah and Mark for taking the time to help kind of demystify some of the things, like, because it does seem overwhelming for all entrepreneurs, whether or not it's sole proprietor or creating a co-op. So, and it just may seem overwhelming, and so I'm so glad you two were able to come and talk about your organizations and the support. Um, I'll just are there any final thoughts? I will give it to Mark just to give some final comments before we close out today's session.
Yeah, I think from my end, I just want to say thank you to Trista and Cooperatives First for giving me and Innovation Federal Credit Union the opportunity to have this conversation today. I think these are important conversations, and having good open communication really helps support the growth of cooperatives and new startup businesses. And the other piece that I think is key for me. We talked about collaboration, and it's I think great that there's organizations like the one that I represent and the one that Noah represents on this call, because there's tremendous amount of opportunity for us to work together to help people be successful in this segment. So I'm glad we could be together on this one to tag team some of the questions.
Noah, would you have any final thoughts?
Yeah, I would say like my final thought is just get connected. I mean, you started this was kind of the starting point for you to kind of understand the ecosystem, but the best way to kind of really navigate that is to get connected to your local advisors, to sit down, to have those conversations, and also to kind of set expectations around the time it can take around to get lending. I think that's something that depending on what you're looking to do, it does take some time, but it's always best to get started to understand kind of some of the hurdles that that you need to overcome to get lending. But don't be discouraged. But if you are an entrepreneur, if you are someone that's looking to get an entrepreneur, likely you have the grit already and the ambition to overcome those hurdles. And in finding those advisors, finding those champions in community is so crucial for that. So just want to say, just reach out to the folks. I mean, I haven't really met anyone that doesn't want to help out someone who's ambitious and trying to do something great in community. So you're always naturally inclined to want to support those type of folks. So so you're already doing the right thing by joining today, and now it's kind of just next steps is to get those one-on-one meetings to help your case by case and nuanced kind of project that you're looking to get off the ground. So say Chimagwich and Kinanasko Matin Trista for letting me be here today, and looking forward to collaborating with everyone and meeting more folks into the future.
Thank you so much. And once again, I want to thank everybody who signed up, everybody who came in to listen today. If you're not already, feel free to get onto our mailing list or visit us at cooperativesfirst.com, and we'll see you next time. Thank you so much, and I hope you all have a great weekend with us.
Take care, everyone.